U.S. stocks charged ahead on Monday and Tuesday as Wall Street kicked off the month and the fourth quarter. While stocks rallied, investors were cheering the fresh labor market report that showed U.S. job openings slid, which is a welcome sign for Federal Reserve officials trying to tame inflation. The Labor Department said that job openings in August dropped 1.1 million. The rally was not only in the stock market as Treasuries fell for a second straight day. The 10-year note fell to a yield of about 3.6% after topping a 2008 high of 4% last week. Colas of DataTrek Research points out that the S&P 500 rarely rallies by over 2% in non-stressed market conditions, suggesting that Monday's bounce was a sign of fragility, not strength. According to Colar, history strongly suggests that Monday's 2.6% S&P rally is neither healthy nor a sign that the index has troughed. As we know, the market has been trying to predict a turning point for the Fed policy for months with little success. So, what do the charts show now? And I know it's boring, but we're going to go back to the volatility index to take a look. So we've bottomed and based in this area here of the chart, and we've moved on up in a stair-step fashion. We've come up to this 35 mark, which seems to be the magic level, more or less, that the chart moves up to and then gets reflected back. So it looks like we're getting reflected back down. We'll keep watching this because I don't think the chart has completed its pattern. And as we talked before, we have an upward moving bottom trend line, and then we have this straight line up here at around 35. And as we move further to the right in time, we're getting toward a pinch point, and I'm waiting for the pinch point to see if the volatility index moves up strongly or down strongly. If it moves up strongly, that means the market's going to tank. If it moves down strongly, say below this trend line, then we have a verified rally. Right now, it's still up in the air. So let's go to our charts. Today we're going to stretch out the chart to a 10-year weekly reading on the SPY, the spiders, and as you can see, we topped out at this level here in late 2021, early 2022, and we've come on down to this point here. Perhaps a slight bottoming and basing beginning. Now, this point here, we went well below that 200 EMA. We're sitting on that 200 EMA about right there, just as we were here in late 2018. So let's go down and take a look at the oscillators. First, volume. Volume's not telling us too much, so we'll pass on. And into the MAC, we can see a large topping pattern here for sure. And of course, we headed down from this point here, late 2021, early 2022. So you did have a bit of advance notice here. And we've talked about that before. We had an attempt move here and a small attempt move here, and finally a bottom at that point. But is this truly the long-term bottom? Well, right now, we got a reflection in the fast line at that point there. Moving on down, we're near -10, so it's still relatively weak. But this little fish hook here may indicate another attempt at a bottoming point there. And if so, we definitely have upward movement, and that would be a divergence with regard to the price chart. Let's go back up here to the price chart and take a look. So this point here is actually lower in the price chart than this bottom here. When once again, back in the MAC, you can see that that first bottom in the MAC was lower than this second one. So that's the divergence. Moving here into the histogram, you can see the divergence as well with this upward move moving that way. Not a very good straight line, but you get the idea. We're still, say, on the downside, relatively weak, so we can continue to be weak here. But there is just the slight possibility that we do have a bottom and basing occurring. It definitely shows here in the price rate of change. Looks pretty decent there. We already pierced through that zero line. We got reflected back down, but we're going to attempt it again here real soon. So is this a bottom and basing? Relative strength kind of tells us perhaps it is. Same thing here. Nice dish, and this fast line is moving on up. Again, it already went up and through the midline or 50 line. We're heading on up again. So those are all telltale signs of a bottoming and basing formation. Same thing with the stochastics. Perhaps it doesn't show as well, but it is pretty much a pattern of bottom and basing. The Williams, now the Williams, we came back down here to that perfect negative 100. We've bounced out of that oversold territory heading on up. I'd like to see it move up above that negative 50 or midline to really see if things are improving. But I think we have a number of signs that indicate to us that we are improving. Back up to the price chart. So the question becomes, is this the bottom? Well, there's still mixed signals out there. We can have a rally, that's for sure, but I want to see if we stay within this channel line. If you remember, we have the top and bottom lines. I want to see this rally come up to the top channel line and break through convincingly. So I'm still on the sidelines for now. I want to see more proof. And for today, that's ChewDog Charts. Thank you.